If we have a look at some of the other lead indicators, so the average number of days on the market, you can see it's increased over the last year, 51 days in August of this year. Of those properties that sold, we only measure this metric across properties that actually do sell during that month, compared to 43 days the previous year. And you can see on a national basis, Sydney's actually doing quite well. 51 days, as I mentioned, second fastest of all the capital cities. And then you see at the other end of the spectrum, Hobart and Brisbane are taking quite a long time to get their properties sold. The level of vendor discountings also increased. So this is simply the difference between what a property is originally advertised for and then what it ultimately sells for. And you can see there's been a bit of an increase, but certainly not as significant as we've seen in most other capital cities. So last year, 6% discount, this year, 6.3% discount. So it indicates that people are perhaps being a little less realistic about their price of their property, but certainly not as bad as some of the other cities. You can see most of them are up over 7% discount at the current moment. And in Brisbane and Hobart, it's quite dire, up around 10% discounts happening in those cities. We're starting to see rental pressure come back into the market in Sydney. So if you have a look, really since late 2008, there hasn't been a lot of upwards movement in rents. Obviously, a lot of people were transacting in property. A lot of first home buyers got into the market. So that created a little less pressure on rental rates. But at the moment, sales volumes are coming back. So people still need to live somewhere. We're not seeing a lot of new dwelling starts across Sydney or across New South Wales for that matter. So there's more competition for that rental stock. And as you can see there, house rents have actually jumped by 8.4% over the 12 months to August, and units by 4.7%. And you can see over the past 5 years, there's been growth of 5.2 and 7.2% annually on average across those two markets. So typically the unit market has been a stronger performer than the housing market, but at the moment houses are enjoying a greater level of demand, obviously, and higher increases in rents. And we're also starting to see that rental yields are improving on the back of fairly limited growth in values and some strengthening rental rates. If we have a look across Sydney, and I've kind of touched on this a little bit, but this is looking at all of the local government areas across Sydney, and you can see the blue is areas where there's positive growth, yellow price falls of less than 5%, and then red price falls of greater than 5%. And you can see out of southwestern Sydney has seen some significant price falls, as has the lower North Shore and the eastern suburbs, where you're seeing price falls of greater than 5%. And then the areas that are holding up relatively well are the western sort of Parramatta, that sort of region, and then up towards the Hills District and some of those outer areas as well. And you can see places like Rockdale are also in the blue there, so they're recording some positive growth as well. But it's interesting to see that some of those premium ends of the markets are the ones that are being impacted quite heavily. If we have a look outside of New South Wales, so as it says, 75 regional local government areas, 37 have actually recorded an increase in median price over the year. And 38 have recorded a fall. And you can see where it's interesting that the places that have seen the price falls haven't been on the coast. Now, in most other states, the coastal areas are really underperforming. A good example is in Brisbane, Queensland rather. You look at Sunshine Coast, Gold Coast, Cairns, Townsville. They've seen really big falls in prices, as have some of the areas in WA like Bunbury, Mandurah, all those places in southwestern WA have seen fairly large price falls, but not so much in Sydney, and particularly areas like Newcastle and Wollongong are holding up quite well. But that's probably a fact that people are seeing that as a viable alternative to buying in Sydney. People that have been priced out of the Sydney market are moving up to Newcastle's, Lake Macquarie's, or down to Wollongong and those sort of areas. But it is interesting to note that the price falls are happening away from the coast, which is a bit of a different trend to what we're seeing in most other areas of the country. I was asked to put up a few slides about some of the best performing areas. So if we have a look on the left there, the Sydney houses, some of the $1 million markets are still faring reasonably well. You see North Sydney, Dollins Bay, Lane Cove West, Church Point, Neutral Bay have all seen house price growth fairly strong over the year. And then we go to some of the other areas, Woolloomooloos and Forest Lodges, Fegans Bay at Gosford. It's a bit of a variety of areas there, and that's what you tend to see with the median price, but you will note that quite a few of them have got a fairly low number of sales. We only include statistics for properties for suburbs that have had more than 10 sales. But even at 10 sales, you can be quite volatile. If you're getting a lot of higher price stock being purchased, it can drive up that median price. As for the unit market, Ultimo, Edgecliff, the Rocks, so a number of areas quite close to the city, and then North Ryde, North Turramurra. So again, a bit of a variety of areas that we're seeing some strong growth in unit prices. Then the regional areas for houses, you see areas like Lake Macquarie there, the Great Lakes. Again, quite a variety, but a number of very, very low and affordable areas. You see a number of them having median prices below $150,000. And then for the regional markets, well, units only tend to be found in the larger regional markets. You're not going to go and build a whole lot of units out at Broken Hill, for example. So we see areas like Casino, Tamworth, Newcastle, areas of Wollongong and Shoalhaven and Shell Harbour. So they tend to be closer to the coast usually. And some of those areas are doing quite well. Looking at indicative rental yields. So for houses, obviously, if you want a good rental yield, you need to go to Blacktown. What's that? 8 of the 10 there in Blacktown, and the other 2 are in the Wyong local government area. For units, again, most of them are out of more affordable suburbs: Campbelltown, Fairfield, Hornsby, Penrith. That's where most of the decent yields are, but there are quite a number of other areas where you can get a good yield. A number of areas quite close to the city: Ultimo, even the Rocks. Some of these in Piermont, those sort of areas are yielding quite nicely as well. So you've got a few more options in the unit market. Regionally, again, a lot of very low priced areas, pretty much out in the middle of nowhere for houses. And then units, you're seeing Tamworth, Tweed region, Albury, Lismore, Newcastle. Just to the final slide, and looking at vendor discounting. Now I've put these in because they're potentially areas where you can negotiate yourself a much better price, and people are going to have to be flexible in their prices. You can see Erskineville, vendor discounting, the average vendor discount over the last 12 months has been 23.5%. But prices have actually still grown in that market. So it indicates that people think that market's growing a lot quicker than it actually is, and are then having to discount their property back to get it sold. A lot of areas in Gosford and Wyong there as well, and some of those North Sydney suburbs as well, you can potentially get yourself. See, Wollstonecraft, values have fallen by 11.2% and people are discounting by 15.9%. That's if you're trying to negotiate yourself a good deal, that's the sort of trend you're looking for there. In the unit market, a number of Woollahra, Sutherland, Cogra, Wyong, a number of places there. I'll let you have a read of that. And then in the regional housing market, the Tweed region pops up quite regularly, not surprisingly. That market's fairly heavily linked to Southeast Queensland, and Southeast Queensland's not performing very well. A couple of places in Lake Macquarie as well. And then for the unit market, again, Lake Macquarie comes up there, Port Stephens, Tweed region, Byron, a few other areas. So that's just some ideas of potentially where you could negotiate yourself a better deal in the current market. That's the last slide from me. Thank you very much.